Hey, Ben Orshak with Key Impressions, and I'm with my good friend.
Kevin Brill with Cornerstone Mortgage Solutions.
Awesome. And so I wanted to bring on an expert because yesterday I talked a little bit about the Fed rate and mortgages and what that means, and I wanted to get in a little bit deeper. I am a realtor, I am not a mortgage expert. That's why I have friends like Kevin here who can answer a lot of questions. And so I just want to get right into it and straight up, Kevin, the Fed lowered rates yesterday. Do you care as a mortgage lender and provider?
Actually, as a mortgage lender provider, I do not care about the Fed's lowering interest rates. That is a misnomer out there, that when the Fed lowers rates, they automatically people think that interest rates for mortgages are going down. But actually, when the Fed lowers rates, that affects the short-term interest rates, which are going to be your credit cards, your CDs, and maybe like the short-term mortgages like the ARM loans. But that's the only thing that will affect those kind of loans. But lowering the rates, it does generate the economy sometimes and help things pick up.
Right.
But really, with what you might ask, what affects the mortgage interest rates?
Right.
And that's going to be Wall Street trading, especially with the 10-year Treasury bond. Don't hear a lot of talk about that on the news, but that actually is what we look for, because when that starts happening, that generally will affect our mortgage rates.
Okay. All right. See, so there you go. Right. Most people, like myself, before I got into banking, everything thought, hey, if the Fed raises rates, lowers rates, it affects everything that has an interest rate attached to it, and so that's not 100% accurate. One of the things I was saying in my video yesterday was that you as an individual have a lot of control about how you get the best rate. Like, you don't have to rely on what the Fed does, what the stocks do, and things like that. And so I want Kevin to just elaborate. What are the top three things that a person can do that will really get them the best rate?
Yeah, I get this question a lot because people come in to want to get approved for a loan, and they want to know how they can improve their credit. And there's some easy steps to do that. The first step is simply making payments on time. Lenders, when we do an application, they're looking at your last 12 months of payment history. They're wanting to see, are you making your payments on time? So it's really critical that even if you just make the minimum payment, just make it on time. So that way we can get 12 months history of on-time payments. Very important. Number two is low balances. So let's say you have several credit cards and you have maybe $10,000 in credit. Lenders and credit agencies do not want to see if you have $10,000 in credit, where you owe $9,000 and you have very little credit available. So they want to see low balances. In fact, I've learned over the years that most people, and I thought this too before I came into this industry, was that if you pay off your balances, that actually will help your credit score. But in reality, sometimes when you pay down to zero, it actually hurts your credit score. So I've actually had several clients that I've actually coached them on the fact that pay it down to a certain level, and this is actually going to increase your score because you're actually increasing your credit line availability. So that's really critical. So just keeping your balance as low as possible, and that way it shows the credit industry and the lenders that you're not dependent on the credit. The last thing I will say is always, if you're struggling with having credit, a lot of people come in and they don't have credit built yet. The best way to build credit if you don't have it is to get a secured credit card. This is all banks, credit unions offer this. It's where you pay a deposit on a credit card. That deposit, I've shopped around, can be anywhere from $200 to $500. So it's actually pretty affordable. And then what you do is you don't max out the card. You just spend a little bit on the card, keep a very low balance. And I've actually seen people within 5-6 months really, really improve their credit score by just doing that one thing.
So, okay, all right. So we got the top three right there. If you had to ballpark it, let's say somebody does, all three of these things to the best of their ability. I mean, can you quantify how much a person's credit score might go up? Average.
I mean, I saw one client that we just simply said, go out and get a secured credit card. He did, and the next month we pulled the credit, and his credit score went up 40 points. So it can impact your score quite a bit by doing that. And really, let me just add this. I wouldn't go out and do these things. The first step you should do is see somebody who can actually pull your credit and look at your credit report and analyze it. And that's what we do here at Cornerstone Mortgage is that
Okay.
we actually, when we pull your credit to do an application, if you don't get approved, we're going to do a credit analysis. We put in scenarios that will show us that if you do these certain things, this is what it'll do to your credit score. That's how I found out by paying off a balance completely actually hurt somebody's credit score. And so
Okay.
I had to coach them on don't pay it off completely, leave a small balance on there. So that's what you really, your first step is to have somebody look at your credit history and give you some advice on what it can, because sometimes I found people over the years, and I did this myself, was I was just doing what I thought was best,
Right.
and at times I was hurting my credit score versus helping it. So you really want to talk to somebody who is an expert and knows what that they're talking about.
Well, good. That actually kind of segues right into the next question that I had was why should somebody consider a mortgage provider, a lender like yourself, as opposed to just their bank that they always, that they've got their checking, there, they've got their savings there.
Yeah.
Why come to somebody like you?
Well, here at Cornerstone, we're actually considered a broker.
Okay.
And so the difference between a broker and a bank is that when you go to a bank and you apply for a loan, they deal with one lender. So if that lender says no, then that's your only option. When you're a broker, we actually work with 12 or more lenders. So what we do is we take your credit score, your situation, and we actually go out and shop for you the best deal. And sometimes when your credit score is a little challenged, we can go to certain lenders and we can actually find lenders that might actually work with people with scores less than 620. So that's why a broker is really good, is that we can actually do those things for you and shop for you and get you the best deal possible.
So basically it's about options, convenience, and it sounds like with flexibility. When somebody is going to do a mortgage, with you, do they talk to you, or are you just take the initial application, then it's to somebody else? How
No, I actually take the application from the client. They
Okay.
call me. We actually do it over the phone. You don't even have to come in and see us.
Okay.
It takes about 20 minutes. And then we take that information, we submit it to Fannie Mae, Freddie Mac, which is the government agencies that actually approve all loans. And then once we get that result back is when we will actually look and analyze the credit, call the client back and give them the information that they need. Hopefully it's approved for the mortgage.
Right.
But if not, we want to give them a path to home ownership. We don't
Right.
want people leaving and thinking, well, I have no hope to buy a home. We want to give you that hope, to give you a path that if I do these steps, I can actually be in position maybe to buy a home within 6 months.
That's awesome.
Yeah.
That's awesome. Well, hey, thanks for taking the time.
I
really
appreciate it.
appreciate
Thanks
it.
for having me.
It's been a blast.
Thank you so
Thank
much.
you.